and welcome to the Fundamental Value podcast, hosted by Joshua Frank, co-founder and CEO of The Tie. On Fundamental Value, we speak with leading analysts, traditional finance and digital asset firms, and investigate how leading minds in the cryptocurrency space research, analyze, and quantify the value of digital assets. Quick disclaimer, this podcast was recorded and is being made available solely for informational purposes.
Today, I'm excited to be joined by Steve Walbroehl, co-founder and chief strategy officer of Halborn. Steve, it's great to have you on.
Glad to be here. Thanks for having me, man.
So I think we need to start with the obvious question. There are 5 guitars behind you, but you gave me a tour earlier, and it turns out there are a lot more guitar. There are synths. There are platinum records on the wall.
Yeah, I'm doing this in my recording studio right now, honestly. So usually,
I thought this was a crypto podcast. So let's talk about music. So tell me a little bit about yourself and your life before crypto.
Oh yeah, for sure. Well, yeah. First of all, usually I have like a Zoom background, so you don't see everything going on. And like I came on here as Zencaster, like wait, there's no background here, so now I'm exposed. So things here, but so I'm in my studio. I have a big musical background in my personal life, and it kind of goes along as like the hacker side of my brain is also like the musical creative side. So before Halborn existed, and I was like co-founded that, went on tour with a rock band, played guitar, and opened up for Bon Jovi and for Nickelback and Metallica, and it was great. Like lived the rock and roll life, but I got paid in beer and groupies. So eventually, didn't work out. Came back. I was like, all right, back to the office. Started doing more like building of that, and I was DJing a bit. I was producing music. Did some great production. Since you requested it, I can show you. Here's all the synths for the production. And then for the music, I can't sing. That's my problem. I am a terrible singer. So all I can do is make the music. So I made it for here, like Britney Spears and Travis McCoy. So I did some songs for her. And
awesome.
it's my band here for it. So yeah, decided, I still do new music, but now the music business is terrible. So I just do the music for myself, and Halborn is my business side here for protecting all the DeFi hacks and stuff. And I actually treat Halborn kind of like my band anyways. Like Halborn is one big band. All the employees here are like kind of rock stars in themselves.
That's awesome. So all right. So started your life as a rock star, writing songs for Britney Spears, and then you found shitcoins and crypto. How did that happen?
Yeah. So I found Bitcoin first, and Bitcoin is not a shitcoin.
I'm with you.
Yeah. Bitcoin is true scarcity. So my professional life, I was working at IBM, and was managing the pen testing team there. We were doing a lot of the internal hacks for and testing and auditing like any mergers and acquisitions that IBM was doing. One of them was Stellar, which is like a coin that they're doing for WorldPay systems and all of the, making sure it's like Swift compatible. And so I was hacking that. So I had like early on smart contract experience. And during that time, I found Bitcoin, became obsessed with like crypto and blockchain from like just philosophical and technical reasons. And met my partner, my partner now at Halborn. Didn't know him. He he owned a marketing company called Token Agency. And he was making all the marketing for these shit coins for example. And I followed his Slack, kind of like kept up with him because he was very like an influencer, and I got all the alpha from him. And one day he said, "Hey, does anybody know how to audit smart contracts or blockchain? Because one of my clients is getting hacked, and we don't know like what to do." This is like before Halborn existed. So I was like, "I know how to do it. I did this before." So he's like, "Great. How much do you charge for auditing a smart contract?" I'm like, "Yeah, $50K. He's like, "Okay, sure." I'm like, "Whoa, that worked." This is like what I make it like a half a year at my job. So, okay. And then it happened again, and it happened again. And then we decided like, yeah, it's a great business. We ended up making Halborn, and here we are from us two to over 100 people now.
So, there were, my next question was, what was your motivation to found Halborn? And I think that's very clear, right? It's, holy shit, it's a lot of money in this, and there's clearly a problem. But there were a lot of other cybersecurity and blockchain audit firms out there when you guys first started, right? There had been around. So what was kind of the gap that you guys saw in the market and what you were trying to fill?
Yeah, the motivation is like, financial part of it is there, but it's actually, we are doing good for the world. Like, we're saving people's money, and I want to see blockchain succeed in general, because there's so much great use cases that it doesn't solve everything, but there's a lot that can solve and improve in technology, for especially in financial trading. So I want to see it have adoption, in enterprises. I want to see it have adoption in the financial world, the art world, the supply chain world. So the service we provide is helping build trust and making sure it's like implemented correctly, which is why we have, the people we provide service for are everybody from like the smallest DeFi projects that are degenning all the way to like Bank in New York, as one of our clients. So we secure end to end for it, and that's we do full coverage, not just smart contract auditing, and that's where we differ from our competitors. To answer your question, they are they're kind of like smart contract auditing factories, and they just do it really fast, as much as they can, quantity over quality. We are very specific on who we want to work with, and we care about quality over quantity. So, quality in the clients and quality in our work too. So we have like the best reputation for nobody's gets hacked after we do it, because we take security end to end. We take it really seriously. So that's our differentiator, is that like enterprise end to end approach for doing everything blockchain and security.
Yeah. So can you talk about those different business lines that you guys have, or what you guys do beyond just smart contract auditing?
Yeah, for sure. So my background being from the corporate world, I know pretty much the whole spectrum of like cybersecurity, from compliance and policy to the infrastructure, Web 2 or TradFi infrastructure, and the needs for that, all the way to like the unique edge case, weird like Solana program that are coming out, and NFT vulnerabilities. So with all that understanding, we're able to be very like empathetic to institutions and provide our security services where it needs. So we do penetration testing, we do risk assessment and compliance and due diligence, like third-party due diligence. We do the smart contract auditing, of course, DevOps, monitoring, and security awareness training. So one advantage is that we wrote the book and the course for smart contract security and blockchain for SANS. SANS is like a huge security education institute. So we do that, and all the students there are from like actually we just did last week. I had it, and there was like Disney, PayPal, Coinbase, Exodus Wallet, a couple others were in the class too, teaching them. So we're able to like communicate that and like understand how they want to do it and make sure they do it correctly. So that's like all the services we offer, and now we do products too, because we're now deploying different solutions, to meet those needs.
And so, one of the things that we see are tokens getting smart contract audits, but it feels like they just get smart contract audits at points in time, and then they like deploy more code, and then they get hacked. And so, I mean, is that something that you see a lot? And how do you when you're working with clients, how do you ensure that doesn't happen? Because at one point in time, maybe even another firm audited them and it was fine, but then they just deployed a ton more code that no one never is. I mean, is that an issue you see a lot, or?
Sure. Yeah. So this is like the root cause for that issue. And what happens is when they audit code, the mistake they're making is they're only looking at it in just its own little isolated contract. They don't look at the environment. And a lot of the hacks that are happening right now, especially in like DeFi, is you're connected, it's called composability. It's like environmental and financial based type of attacks, where how do you test for a flash loan, for example, where you're borrowing liquidity from a smart contract protocol like Aave or something, and using that liquidity to manipulate the price on side of like a pair. You can't really test for that accurately unless you consider the environment and the amount of liquidity. So that's why they get hacked. They're kind of like looking at it in their own small, like isolated environment, or like they don't look at the full picture of it. So that's really the biggest mistake that they're doing. And the other being that it's highly complicated, And once you go on the blockchain, it's always there. It's public for everybody to see. The code can be audited by hackers there, and you can't really undo the code or take it back on there unless you deploy it, proxy contracts and stuff. That's, a more technical conversation. So yeah, it's different. You're kind of like exposing yourself there. If you don't consider the environment, you're not going to have a full security review.
Yeah. So let's actually go into proxy contracts a little bit. So how much more of a risk are proxy contracts?
Proxy contracts, I think, are reduced. It's more risky to not have proxy contracts as far as having the security side. Because if you make a mistake or you need to change something, like think of it as like the way to patch, do patch management on contracts sometimes, where you can, oh crap, this has a vulnerability. The proxy contract acts as like a load, like a switch. Yeah. So you say, oh, this one's bad, and let's switch it to this one. You deploy it, then you change the proxy there. So without that, you'd be like stuck, with that one, and you have to make a massive refactoring. Especially if like maybe your wallet or something is pointing to this, it's like hard coded now there. That's it. So proxy helps there, to eliminate the issues of immutability.
So where are you guys finding the most vulnerabilities kind of across the board? Both on like a type of token level, is it like with DeFi contracts versus NFTs? Like, is there any sort of patterns? And also within them, like how much are you finding vulnerabilities, like as opposed to on the smart contract level? Are you doing audits of like the website and things like that as well? Because like I presume like the Uniswap front end, as an example, could get hacked just as easily, or maybe more easily, I don't know, as the actual smart contract itself.
Yeah. So when it comes to the most risky type of attacks right now in blockchain is, I would say, bridges right now. Bridges. So think of it like this. You have two different chains that don't talk to each other at all. It's like two different networks, and you want to trade, liquidity between the two of them. How do you do it? You have either wrapped assets, like, derivatives that you create on one side. So now you have, what do you do with the original native asset? You have to like lock it in a vault, to get redeemed. Now you have like a vault with all of that liquidity, all that assets and value. It's like, why go and try to hack individual ones, like pickpocket, like people, when you could just go to the bank and like rob it? So they become high targets, and they also are highly complicated because you're trying to like, put a square peg in a round hole together on the bridge. And, sometimes it's done wrong. Sometimes, there's different vulnerabilities that you've never seen before. So like Poly Network hack is like a great example of like $600 million gone because they got access to like the bookkeeper, like the admin contract to authorize every transfer out. So just the complexity and the amount of value locked there just makes it the riskiest one. And off-chain, for the other question, like all the off-chain components for it, like the front ends, it all depends on like the nuances of the implementation. Like, are they storing a private key to sign for you? Is it a Web3 backend, or is it like a centralized server backend? Because each one will have a different risk profile. So we look at the details, and then based on the technology details, we'll pen test it, audit it, or do a risk assessment as appropriate.
And so can you talk about like some of the vulnerabilities that you helped clients find recently? I know you've written a couple example case studies on your website. Maybe you want to talk about those, or anything, more specifically. I mean, it would be interesting if you could like even quantify how much money you think you've helped people save.
I can definitely, yeah. So I can talk about a few. One, what's fun in the security world, they have this thing called like a 0-day vulnerability. And that's where we found something new that we know about. The world does not know about it yet, and if they do, there's no fix for it. What do we do if it gets exposed? Then there's like a mad rush to like fix it, and like tons of people. So we found a 0-day in every single browser crypto wallet, almost every single one, that would allow an attacker to steal the private key out of it remotely. And if you try to quantify impact on that, it's
every single asset.
It's like everybody that doesn't use a ledger or Trezor, could be impacted by it. So when we found about that, this is big, and there's a CVE for it, which is it's like a vulnerability in the NIST database, like the government database of vulnerabilities, there's a finding there that to like say, hey, CVE number 2022X is like the MetaMask vulnerability or every wallet vulnerability for it. So we had to manage that and like work with the developers, kind of contain.
So did you have to reach out to every single one of those
Yes.
wallets and communicate before and hope it never got public that this was going on?
Yeah, it's like exploit bug bounty. First of all, it's convincing them that their baby is ugly. It's like, hey, we found a vulnerability. It's like, it's not a vulnerability. It's hard to like really show them the exploits and make them like take ownership of it. It's like the 5 stages of grief in a way. And so first of all, it's corralling that. And then we had a private signal chat of every wallet developer to like disclose it to all of them at once. And it was, we had a lot of them. Some of them took it seriously. Some of them were like, kind of have a bit of like, oh, like, why did you like find this? Like, a bit of like shock. It took about like 9 months in order to finally get a fix implemented, upgraded, and then release it publicly. And that whole time, it's like, is this going
So
to
the entire time the risk continued to exist while these guys sat on their hands and did nothing.
Yeah, and yeah, they're doing stuff. Some did a lot, some didn't do anything, waiting for the others to fix it. Because to be honest, like I think the issue is where it's a systemic type of vulnerability. These are the ones that are the scariest, where you have a vulnerability in one piece of code and everybody copies and forks it. Imagine if like Open Zeppelin ERC20 had a vulnerability. How many forks of it there? It's like widespread impact. Because everybody's cloning that vulnerability, and now you have like embedded. It's kind of like in the traditional security world, they had that a while ago. It was like Meltdown Inspector, like inside of the Intel chips. So Intel chips had a sidechain vulnerability. It's like every single computer is vulnerable right now until they have reason to it. So those are the ones that are the scariest, or like just mass impactful ones for everybody, because it's like a core asset involved with it.
And so how do you find that? Like, are you guys looking for vulnerabilities specifically? Like, are there bounties that are out from these companies that basically are an incentive for you to go and do that work? Or
no, we don't work off of like external bounties. So Halborn is a security company, but I think we're more of like researchers in a way, because what makes us really special compared to other pen test companies, and why we eat their lunch on like everything and take all the businesses, because we're researching and we're actually putting in like the sweat to like learn this new technology like inside and out. And we're applying that and finding these things to look for the nuances, and we're discovering these issues that nobody's seen before. Because a lot of, to be honest, and like just to be blunt, a lot of like security research companies or security, they're just like Googling everything and copying whatever everybody else does. And we see that. So we're the pioneers on that. Like and it's in blockchain, but Halborn in our whole like essence is security for emerging technology. So blockchain, but also eventually IoT or AI security, anything that there's like a market need for it. It's like a new technology that is requires security. We're the ones to be there to make sure that we do the research and define the security for it.
so, a lot of our listeners are investors, right? They're at hedge funds, they're at venture funds, they're at prime brokers, and all these different things. And a lot of those folks came from traditional financial markets backgrounds, right? And when I think about analyzing a securities risk, right, or any asset, I want to look at financial related risks like beta and correlation and a bunch of different metrics. Yep. In crypto, there's a whole nother level of risk, which are beyond just market related risks, which are security risks. So how, as an investor, do I start to think about this type of thing? Like, you've now scared me. Like, these bridges are at risk. These DeFi protocols all forked each other. They're all at risk. The wallets are at risk. How do I get comfortable with this? And how do I make decisions with conviction if there's all, and how do I even like, how does somebody who's now coming into crypto that works at a large hedge fund get comfortable with these assets from a cybersecurity point of view?
Yeah, so this is where you're flipping security upside down when you approach DeFi. The first thing is like understand the protocols a bit from the financial side, because this is very unique in cybersecurity. And what we do is you're not just like a code pen tester like in traditional security. You have to know financial pen testing in a way, which is that environmental. So like if you don't know how a lending and borrowing DeFi protocol works, and like what's the variable rate amount, and what's like the liquidation ratio, how much margin do you have to have? You're not gonna be able to test that to know like, can I manipulate it to like liquidate people like before they hit their margin? Like you have to understand how it works. So that's from the security side, and we see those things too. So as an investor, like a hedge fund, how do you protect yourself? Is trusting like just do your own smaller like due diligence. Like has the code been audited, or the project been audited by somebody like us or like other well-known security reviews? Is the team that developed it, are they anonymous or are they like known?
Is there a pretty clear correlation? Like, do anonymous developer teams tend to be more vulnerable or get hacked more than known teams?
It's like, this is the thing, like with there has been both. Anonymous, I think, is riskier because they have, they're not exposing themselves to any.
Well, you also have the rug pull risk associated with the anonymous developers. Yeah.
Yes, you do, and there's been like rug pulls for just even known people, because if they don't have the controls behind it, this is something that we look for when we audit. If there's like the emergency withdrawal function, like the function that can just pull all the funds out, and it's I'm like the project lead, and I know who everybody knows who I am. It's like, I lost my key. Somebody stole my key and they stole all of it. It's like, did they, or was it a rug pull? It's like, or it's hard to know. So this is why we're building solutions to help protect those type of instances, because you have to balance like the DeFi and openness of it along with like the security control, which you can consider that centralized, but it's like you got to find the happy place in the middle of like control and security and like decentralized finance. Otherwise, it's just why not just be in the bank as normal and like even use like smart contract stuff.
So do you think DeFi is ready for mainstream institutional adoption from like a cybersecurity perspective?
So I think that what we need, higher level,
or if you don't, what do you think what are the steps?
No. I have like a very clear, like why I want to see it succeed is we need to focus less on just gaining value and like about like token price go up and I made this much APY, and focus more on using it for the benefits, like non-value benefits. Like you can use smart contracts to do mortgage solutions where you can like close a home like way faster, have like an escrow contract, have a underwriter that contract that will figure out how much LTV there is for an asset owner. You can execute all of these like decisions transparently, cutting out extra excess costs of like agents and other brokers, and close a home in like a couple days, because everything's like already programmed for the logic, and it's done. You can put assets and collateral up and see like, do you have assets in your wallet? Yes, like that's like a financial service that you can replace the traditional system. Is way more efficient. Or even like cross-border payments. You could do insurance protocols, and these are like financial services that have nothing really to do with investment. It's about efficiency and accessibility and transparency and stuff. So that's like one example of what I'd like to see more of.
And so, we talked a little bit about institutional investors. What about individual investors, right? I mean, if it takes all of this to build conviction in an asset, right? And doing review and understanding the token economics and stuff like that. I mean, I feel like in this industry, I think it's broadly in finance, we see the retail investor getting totally screwed. And I think that's definitely, I don't know what the numbers are in terms of the hacks and who's gotten impacted the most. I'm sure a lot of the larger hacks are a lot of institutional capital, but curious how if you were talking to an individual who was asking you, hey, I'm really interested in DeFi. I want to play around with this, right? How do I get comfortable with particular things? Is it really as simple as, the best answer is just like look out for, make sure that it's audited by a reputable smart contract audit firm? Is that all they can do?
So no, they could do, I think a retail individual should ask themselves first, like, what is my goal? Like, what do I want to do? And there's no such thing as like quick, easy money. We all know that. It's like,
What do you mean?
it's
I was in this market for 100x on every single token.
yeah, right. I went 100x margin. Like, why did I get liquidated? It's like
Yeah,
they don't know about like
exactly.
they don't know about like algo bots. Like, oh, if somebody's deal, let's go look. Let's like go, sell it really quick to liquidate them and push it back. It's like, why is there a big red wick right when I buy it? It's they don't understand that. So it's like, what are you in it for? And there's a lot of things you could do besides like buy something and hold it. So the first is you're giving the access, the key. If you're holding a key and you're owning that key, you now have like, you're the bank, so you're responsible for protecting that. And that's like the first thing that goes wrong is custody. They don't understand that, like, if you lose custody of the key, you're giving up your rights to own it. So that's one thing too, is you're not, there's a lot of custodial services now, which makes sense for like my grandma. She's gonna give up her mnemonic phrase to like the first person to ask for it. So custody makes sense. But also, like, what about like adding liquidity to like a liquidity pool or something, and earning, with your assets, letting it earn rewards through like swaps, on Uniswap. I mean, that's like an alternative way to do it. Yes, there's risks in the LPs, so don't put all your eggs in one basket. But if you are doing it for this reason, you can like actually earn some more for it. Maybe your goal is not to like earn like so much high APY in these risky assets. Maybe it's more about being able to be part of a DAO and like get a governance token and vote for like ApeCoin for who you want to see, like the next Eminem concert for ApeCoin or something. Like, what's your purpose? And then kind of go after that rather than just listening to whatever Elon Musk says.
And so as we think about, you mentioned actually earlier bridging, and I had a question I forgot and remembering it now. Are there particular, when you're bridging an asset, right? Let's say you're bridging from Ethereum to Avalanche, there's two chains, right? And so you guys are naturally auditing contracts on multiple chains. Are there any chains that are more difficult than others?
Yes. Yes.
So what is exceptionally difficult and what is easier?
So the ones that are easier are the ones that are like the same language, like EVM native, which means like Ethereum native ones, where it's like the same, at least the same programming language on each side, so they can talk to each other. They're like compatible. The difficult ones are ones that are like native assets of two chains, like Thorchain, for example, which is, I love Thorchain. They're like the only ones really doing it with native assets and not derivatives, which I wholly respect. But it makes it extremely difficult because you have to find a way to vault the native assets, to store it and to monitor it and keep track of a ledger on like two disparate systems that like work completely different, like a proof of stake and a proof of work here, C++ for Bitcoin and Rust for Solana, and managing that effectively, in a decentralized way is like so hard to do, like as far as like technical challenge. So those are way more difficult to comprehend and then also to audit.
And so do you think we have, enough developers in crypto, and do you think we have developers that are really prepared for the challenges, and vulnerabilities that exist in this space?
I gotta say that question that speaks home to me, because like Halborn, like our biggest risk is not getting business. Like, we have to say no to so much goddamn business. It's about finding enough talented people to do it, right? Like, having the right skills, and we're really picky on quality on it. We're not just going to hire like any warm body, just because they have auditor on their LinkedIn. Like, that doesn't fly with me, because there's too much risk for us as a reputation for it. So finding developers for this is extremely hard, for everybody, not just us, that are good, and also finding the skills involved for it. So that's why we focus, like my focus on it compared to my partners, like internal training, internal knowledge sharing. This is why I wrote the SANS course, to teach and like take those teachings inside. Even like getting a job, all of our engineers, we don't interview anybody that with a good resume. Like, you have to do a technical challenge. Like, you have to hack something, write a report. We'll look at the report. If it's good, then you can get an interview. And then throughout the interview, we'll like kind of do trick questions to see if they cheated or copied it from somebody, which we see that too. And there's a lot of like filters and barriers to entry for it to finally get in the door. And I wish more people could get through the door, but that's the biggest bottleneck we have right now is that the talent.
So that actually rolls well into my next question, which is you guys raised a $90 million Series A. And if it takes that much effort to land talent and to bring it in, it's going to take a very long time to spend those $90 million. And so how are you guys thinking about the future roadmap and path for you guys? And, obviously, I'm assuming you guys have big plans given it's not an inconsequential Series A.
Yeah, no, we definitely do have big plans, and we don't want to waste the capital. I'm very obsessed with efficiency and quality. Maybe I'm German, so maybe that's just my nature. Your blood is like finding and optimizing as much as we can from the people, from the revenue, from the opportunities that we see. Because in this space, there's so many things we could go down, like so many paths we can go down, and opportunities that we can explore. Like, what's the best strategy for it? So we do a lot of analysis and think about which path should we go down. So the capital that we have, we're using it for hiring better talent. So even though we hire less people for quality, we're going to be paying those ones that are here way more to retain it and grow with us. And now we're doing products. So product is usually companies that are product-based companies, you guys probably know because you have a product at Thai, you have a lot of burn, on that while you're developing it and while you're preparing it for release. So we started services, which was immediately profitable, as you heard about my story, and worked up to now we're at product side, so we can use this to acquire companies that are a great addition to what we do, or to invest in the product creation to
So what do you mean by
services.
products? Is a lot of it would it be some automated pen testing and things like that? Is that what you mean by a product?
No, we have right now we have two products launched. One of them is an operating system for development and testing for everybody, and the other one is Seraph, which is our flagship product. Seraph is the very first preventative smart contract security solution, because everything right now that exists is monitoring. So watching the chain on block explorers and there's a tornado cache transaction. It's already happened. It's either that or it's auditing. Automation pen testing does not work. You can't automate the mind of a pen tester and auditor, especially with this composability stuff. So what we do is a preventative solution where we act as a notary. It's on chain. There's no custody. We don't own assets or keys, but the solution is it lives inside of a smart contract, and only the critical ones that are at risk. There's a wrapper around it, and it requires a notary. So if you're an investor, or let's say you're an institution and you just deployed a bunch of capital to a project, they can, they're on DeFi, people can swap, do whatever they want. But whenever that withdrawal function or that proxy upgrade function or the add another admin function gets called, that one gets alerted, and the notary has to approve it to make sure it's legitimate. So that's what this.
So who's the notary on the?
So Halborn can be a notary, and it's as a service. So you can assign third-party notaries for Seraph. And we train notaries to help them make sure they know if there's an alert and they don't know what to do, is this a rug pull or not? We can come in and help do a transactional level audit in a way for them, and then they approve it.
And is this is live on a number of different projects already, or?
Yeah, seraph.co. You can look at it's the dashboard. So right now, Beanstalk, which was a huge hack that happened, they just got onboarded to our system, and we're doing notarization for them on their the emergency commit function, which is what they got hacked from before. So if there's an emergency commit for a proposal,
and you'll work with the projects on building thresholds and stuff on notarization, and got it.
100%. Yeah, that's part of it. We build the run. It's called a run book or a playbook. When this gets called, why is it called? What's the expected reason and result for it? It's what is the known good state if this gets called? Then we get alerted. Does it meet the state? Yes, no. Okay, yes, it's approved. Then it's completely transparent. We're running our own mempool, our own purgatory, and then we can simulate the contract transaction, make sure it's legit, and then we say approve. It's just bypasses and gets written to the chain. If it's rejection, then it reverts. So we're able to do this product. It's very like nobody else is doing it right now.
It's cool. It's cool. My question is, I think it makes total sense. Or have you got any pushback that that's like the antithesis of decentralized in terms of like the fact that, yeah.
Yeah, we have. That's like the biggest challenge with it. And I have two retorts for that. The first one is we're a cybersecurity company. We are, an independent auditor. We're objective. It's like saying Cloudflare, like, oh, why do I trust Cloudflare to protect my website? It's like, why would they want to be malicious and like let bad?
I mean, their entire reputation is, and their entire, I mean, your entire business, which just raised 90 million, which means the valuation is a lot higher than that, is based off of this. You're not trying to reject somebody's transaction because you think they, you don't like them or whatever.
100%. And we don't have our own token. Like a lot of like our competitors, they have their own token. So imagine, they're on Uniswap and they're going to like block every other trade except like for their token or something like that. So we have stocks, we're going on Wall Street and going to IPO like that. We're on that level, not like, a token that you pay to like do your automated scans. Like, fuck that. Like, no way. So that's one thing is like
these other firms that have tokens, were these like 2017 things or is any of this newer?
And I don't know. Like, I know, like, I don't want to name names or anything.
No, I'm not asking for names.
Yeah, some of them are older. Yeah, some of them are older, and some of them are newer. As a matter of fact, so I don't know if it's like their way of raising capital or like they're trying to. Honestly, I don't know the mentality behind it, but we don't do that. So
maybe they can deploy you guys to verify their transaction.
Yeah, get a security auditor to do the auditing of the security automation. I love it. That's actually brilliant.
Security auditception. Yeah.
No, so the other side of it too is like besides the reputation part of it all is if it's like a DAO. The biggest pushback is with like a DAO. Like Beanstalk is a DAO. So why have somebody there to like be less decentralized and approve things? And the fact is like if the DAO votes us on to be an auditor, then that's okay. That's part of the governance process. So it's acceptable.
So let's actually talk about that. Winning DAO proposals, not fun. Do you want to talk about that process a little bit?
Well, yeah, there's like two types of DAO.
And how centralized the voting is on most of these things as well.
Yeah, like Snapshot is like the biggest one right now. And I think the TIE, you guys, you like look at all the governance stuff and probably see all the on-chain things and see like Snapshot. So, you have the governance tokens and like the owners of those tokens. And it's like, okay, great. Who's like the whale? Like the majority.
Who do we need to get into contact with to make sure that our proposal gets approved?
Right. Yeah. And if the proposal is centralized, even though it's like governance token oriented, it's like, how do you know that they're going to like implement what was voted for too? So Beanstalk, to their credit, they're a great team. They were doing decentralized governance. It just got manipulated. So that's why we're here to help them do it, because they want to move back to like on-chain governance. That comes with security risks, like flash loans to take over all the tokens and what's going on. So that's like when there's mistakes, they keep going back to the centralization, and that's like antithesis again. So that's like why you have to like find that middle ground of acceptability of like DeFi and security, so that it can thrive, so that can actually be successful and protect people, and also allow this the whole system to thrive and like grow.
So funny, I was actually speaking to somebody and they had submitted a proposal for one of the top 5 DeFi projects. I don't want to call out who it is. Could not get it approved. Could not figure out why they couldn't get enough votes. And they were asking around and somebody's like, oh, have you called this venture fund out in whatever country? Gets on the phone with the guy, talks to him for 5 minutes. He's like, you're approved. He's like, what? He's like, yeah, I just voted the entire proposal. I mean, it's so ridiculous. I mean, the guy literally, they were like 90% of the vote short. With a click of a button, had so many of the tokens that just, I think, we all talk about, decentralization, but in reality, how decentralized is any of this stuff really? Yeah,
it goes back to, yes, like this is like the whole thing with like proof of stake and proof of work too. It's like the ones that have all of the wealth and power can call the shots on it all the time. Doesn't matter, even on the on a DAO. So it's hard to get away from that. Like proof of stake, the more stake you have, the more validation power you have. And if you're going to accumulate, and then now you're going to like accumulate even more power because you're going to get more rewards for being the validator. Just like accelerates that process. So it's like, how centralized is it? Yeah, I completely agree with it. And also, like, you look at things like USDC or USDT, like, the stable coins that are on DeFi. Yeah, have you like looked at some of the functions on there? It's like freeze or burn, or it's like.
Well, I was thinking when Wintermute got hacked the other day for $180 million, I'm like, I wonder if Circle is just going to freeze the USDC. That was the first thing that went into my mind. I was like, a third of it was USDC. I wonder if Circle is just going to freeze it.
Right, exactly. So, I mean, is that centralized? Hyperbole question, of course, but that doesn't really even happen in like traditional finance of having like, can you go into my like Wells Fargo account and just like burn all my cash there? I mean, I guess you could, but it's not as easy as some a key just executing a transaction. There's a lot more politics and internal approvals that go on for that.
Yeah. It takes a lot of, well, I mean, we have seen things like banks not calling out names, but, creating 5 million
like
fake
Swift
accounts
system,
and
like
stuff like that.
You're blocking out of the system, like a whole country, like.
Yeah.
So there's like censorship across there. It all depends on like the access control and the power. And, this is why me personally, I see the value in both. Like the whole, I like proof of work, and it's like the hash power. In Halborn, like our internal system with people, we have a proof of work system, and it's with Bitcoin how it's like you're gamified. All the nodes are gamified. How much hash power you put in, the more rewards you get. That's how that we are. So people that get hired here, the more hash power they put in, the more results they get, the more rewards they get, and it's like transparent. Like everybody can see, what else everybody else is doing, how much they earned. Like we have a points system for like internal bug bounties. And it doesn't matter if it's like you work 1 hour or you work 100 hours a week. It's all about like the results and like from that. Like a good hacker, it takes them 1 hour to hack a system. A bad hacker, it'll take them 100 hours to like figure it out. So it's like, I don't care about time. I care about results and the proof of the work. So that's how we run it too.
I like it. So let's talk about proof of work. Let's talk about, we this podcast is called the Fundamental Value Podcast. Yeah. I like to talk about fundamentals, but earlier on we were talking about Bitcoin. It sounds like you're a Bitcoin fan. I'm also a Bitcoin fan. So I feel like the whole Bitcoin narrative has gotten lost the last couple of years with everything else that's going on. So, can you kind of let me know what you're excited? I mean, are you a Bitcoin maximalist? Is that how you would define yourself? Or you?
So me personally, and my work, my client, client services side of it is completely different than my personal side. I like Bitcoin. I'm not a complete maxi only Bitcoin. Like I like Monero too, privacy coins and stuff for that.
How shielded are Monero transactions? Sorry, I want to hit on how private are privacy coins.
Well, Monero in particular is like extremely private, and it uses random X. It's not like a private key, public key. There's 4 keys involved. Like there's a transaction key, there's a view key, there's a private key, and then there's a public key. So if there's no block explorer to like go see where the funds went. Like if you're not given a view key, you're not going to know anything. And if you're not given a transaction key, even if you steal the private key, you're not going to be able to see the old transactions anyway. So it's extremely difficult. And there's no like cracking the keys either, because it's like very, very difficult to reverse engineer all of that mathematically. So Monero is, if you ever go on the darknet, I don't know if you've ever been on the darknet before, like Bitcoin is actually kind of fading away now. It's only Monero on all these like darknet markets.
And no Zcash or Horizon or anything else?
I actually don't. I mean, I'm sure they might. I knew they use like zero knowledge proofs. I don't know the deep enough yet on those because they're not clients of ours. So like I spend my time on the clients more to understanding them, or my own personal like investments. I'll do it.
Yep.
But I think Zcash, I've heard it's pretty secure. I don't know about Horizon is one of our clients actually, but for a completely different reason, for like NFTs. So back to the question about like Bitcoin. I love Bitcoin. I like Monero, and I actually am a huge fan of like NFTs as well. Not for like the whole like art, flipping of like JPEGs or anything, but I'm an artist. Like in my studio, and if you notice, like I also have like a bunch of artwork and stuff on the wall, of like things like comic book art, and I like I'm a collector, so I like authentic things, and like, what's the provenance for it? Where did it come from? How do I know this is like the original? Who is the artist here? And I like rare and scarcity, and I feel like NFTs is a way to do digital, authentication and digital.
So what types of
Provenance.
NFTs are you most excited about then?
I
Or
like
what specific
so
collections or like things that have come out so far, and what are you kind of in the future looking for and looking to see?
I would like to see NFTs as a musician with all the guitars behind me, doing like honest and transparent like royalty payouts for intellectual property. So like a song, smart contract version that represents a song, and you can track to see how many listens there has been. Like imagine like a decentralized Spotify or something, and you know exactly how many people listen to your song, and then the reward payouts are instantaneous instead of BMI or ASCAP doing it, and you can make sure that's paid out correctly. So things like that will be beneficial for an artist. I mean, you could see like NFT creators in the contracts, like 15% royalties go directly to the artist. Like once a transaction happens, a trade, they get that money. So I think that's great for content creators to get direct listener, no, peer to ear rewards maybe. And this is related to like my
Isn't
music
isn't
business I
isn't
do.
Audius trying to do that, if I'm not mistaken?
Yes, they are trying to do that, and so their protocol, I haven't dug into that one too much. There's so many projects out there. I just do the ones that Halborn has as clients mostly. I don't have time to audit stuff
I'm
that
a
don't
hundred.
pay
By the
me.
way, people. I mean, we're a data company, right? I mean, you've seen our
Yeah,
platform. We have so much information, so much data, and people are like, "What token should I care about?" I'm like, I don't know. I'm just trying to build the tools. I'm not. I'm not
yeah,
making the investment decisions.
yeah. Halborn, we have like 275 clients, and like if they're not paying for our services and it's not me personally investing in it, like I don't have time to like audit them. So it's like, you want me to, in my opinion, but we do audit a lot of people. Like we audited ApeCoin and Yuga Labs, and we're doing like a lot of the stuff there. So I know about the ones that we do have. Uh, but yeah, Audius, I know about what they're doing. I think that's the type of projects I like to see, is like real value, like the buzzword true utility, whatever. But yeah, it's true. Like I think that more than like you're part of a club here that's building a community for, is like, dude, there's like it's already a community. Like DeFi community is a community, um, but having tied to provenance. I really like about art supply chain, and I like about rewards. Going directly. I'm all about like cutting out excess. The whole efficiency side of me. I'm obsessed with efficiency. Like un you know middlemen that add no value to transactions except extra time and extra payments. Like if you could bypass that and just have like a consumer to like seller, or artist to to listener, or like financial institution to borrower directly without all the excess, like that's the kind of shit I like.
And so, one of the questions that we ask all our guests, right, I kind of alluded to earlier, was about fundamentals. So, what do you think, as you think about a token that accrues value, right? Obviously a stock has earnings and revenue and dividends and things like that. What do you think are, fundamental to, understanding and evaluating tokens?
I think supply and demand is what it comes down to. If you have scarcity, if it's something like Shiba Inu, where some supply is like crazy, or Dogecoin, where it's just like mining, every block reward is like so crazy every minute. It's like excessive supply is going to drive value down. I mean, that's just like basic economics, right? I think that's like the fundamental value. If you have scarcity, like Bitcoin, 21 million cap, even if it gets hacked, you can't mint new coins, you can't change the block reward. Even if you have a 51% attack on Bitcoin, which is not going to happen, you can't create more tokens that don't exist already per block. You can double spend ones you already have, but that's temporary, because to maintain the cost of that hash power, it's like, why not just mine Bitcoin yourself? It's like more profitable that way than paying for it. So I think that's the fundamental value for it, is like supply and demand of it. What's the market cap essentially?
We actually haven't seen that many 51% attack recently. It feels like that's kind of been,
Yeah.
I mean, we
Yep.
saw three 51% attacks on Ethereum Classic in like 2018, 2019. But I feel like that's kind of, and it's
Yeah, you know why?
kind of a little bit
Because
out of the
it's
conversation these days.
Yeah, but the reason why is because there's less proof of work systems coming out. There's not too many like left. I mean, even Ethereum now went to proof of stake, but proof of stake can, some of them you can get, it's a 31%, a 33% attack. Is if you have 33% of the stake, that's like the logic to like validate blocks. So if so can you be like in control of a proof of stake network if you own 33% of all of this stuff? Like, who owns all of the Ethereum right now for proof of stake right now? Like some of the major validating
Coinbase.
companies. Exactly. Yeah. Coinbase or Blockdaemon, all those other ones. So they, can they control the blocks? We'll see.
And so, last or two final questions. What in crypto has you most excited right now?
Right now, most excited is, I think the most excited project, or just like conceptually.
Anything.
Yep. I think the most exciting thing for me is, on a positive note, probably all of the excess like leverage getting kind of washed out recently from like this like liquid staking stuff and getting back to like normal on it, like with Celsius and like all the stuff they were doing with, speaking to like financial institution people, they probably get it. Like I saw it coming when you have investment locked in a central area, and then they're making a derivative, like a liquid version of that, and they're reinvesting that, and then that's like a derivative. It's like 2007 financial crisis all over again. It's like when it all unwinds, there's going to be hell to pay, and liquidity is going to get locked, and we just saw that happen. And I'm glad it happened to like stop it for now, and get back to like more of the fundamentals of values of it, I guess you could say.
And so my last question for you is, what's next for Halborn, and what's next for your music career?
Okay, so with Halborn, we're just going to keep on scaling. Now we're moving into the product side. We're a solutions company, and we're working with some of the biggest companies like in the whole space, not just like in blockchain. So we're going to continue to provide high quality products, develop more, provide institutions and other companies in the fashion world, the banking world, and some of the layer one projects, more services. And eventually the long term is to get into gaming, GameFi, IoT, and essentially our goal is like, we want to go public, with the company too, to be one of the top security companies in the world. So that'll happen in we'll see. Things happen really fast recently. For my music career, so what I'm looking to do is, with my background of touring in a band, in like a bus, I don't want to do that again, but I do love playing live. So I would like to create, with my music that I'm working on, a immersive experience for live performance, kind of like a Las Vegas residency. Own the venue, have play the concert, but make it virtual reality headsets, and have an immersive concert. Be able to like have augmented reality, and sell tickets like through NFTs. So it's like I don't need Ticketmaster or Live Nation, just directly to people. It can show proof of attendance at the concert, maybe airdrop them some rewards for like attending, like free shirt redemptions, and have just have that, like get the, instead of a virtual world that translates into live, have like a live world that translates and uses the virtual world to make it more interactive, and be able to like have like immersive music. It doesn't have to be in a complete stadium, but have it for the people that want to be there. Even if you don't like my music, it's still a cool experience that you want to go like see anyways.
So where can people find out more about you, about Halborn, learn more about the offerings, and then where can people find your music? I think that's also a cool addition.
Yeah, so for Halborn, halborn.com, we have a lot of blogs on there, like hundreds of them. You can read about all the findings. We always keep them up to date. And me personally, I'm kind of an antisocial social person, so I don't have Facebook. I rarely update my Twitter because I'm like always working or making music. But Twitter is the best place to message me, that I'll see it. And if you want to find out the music, the project of all of this stuff is, I'm currently working on it when I have my free time, which is very rare for the past like couple years. It's called Dead Code. Keep an eye out for it because we have a music video coming out in about 2 months for the first release. But my old music, you can definitely find anywhere. Stellar Revival is the band I was in before on Capitol Records. So that's on Spotify, that's on iTunes, that's all over the place. It's on Guitar Hero too. So Stellar Revival. I play guitar for that band.
Awesome. Well, this was awesome. I learned a ton, as I'm sure a lot of our listeners did. Thank you for coming on, and would love to do this again in the future.
Awesome, man. Had a great time. Thanks.